Hey, welcome back to another episode of Where the Road Gets Real. My name is Chris Toon. I'm going to be your host. We hop in my truck. We travel all up and down Southeast Idaho, talking to local experts about some of the things that matter, some of the things that don't, and literally everything in between. So if you haven't done so already, hit that like button, follow us along on YouTube or Spotify, and hop on in, buckle up, and let's go pick up our guest. Hey guys, just want to jump on here real quick before we start the show. This week we have Collin Dial on, and we're talking all things finance, mortgage, stuff like that. So, great show. There was some technical difficulties, and the cameras kept on overheating. There was no airflow. It was like 30-something degrees out, and with the air on inside the truck, it ended up overheating a half hour into the show. There's a couple glitches here and there, so please bear with me. I wasn't gonna actually post this, but I feel like going back through, Collin really dropped a whole bunch of like knowledge nuggets, and it'd be a disservice not to share those with you. So going forward, I invested in some nice fans and have that all set up, and we shouldn't have this problem anymore. But in the meantime, if you haven't already, go ahead, hit that like button, share it with your friends if you find anything useful that you think they would like, and yeah, help me grow my channel. I know we're new, and I can't do it without you guys. For you guys to keep on coming back, I appreciate you. Comment, let me know if you want to be on the show. I am actually now booked all the way through March for guests, so we're doing great. We have one coming out every week, so let's go check it out. Thanks for joining us. See you out there.
Route or VA or conventional, and it's like Idaho housing,
Right,
580 credit score, and
it's
you
like
can
500 down.
not even, it's 0.5%,
Oh,
and minimum contribution, and you don't even have to be a first-time home buyer
okay.
for Idaho housing. A lot of people think, oh, it's only for first-time home buying. No, it's not. If you're not a first-time home buyer, the minimum contribution is $1,000,
Okay.
which $300,000 house, that's less than 0.5% anyways, right? But people just assume that, oh, since I already own a house. And not only that, the other thing that you got to keep in mind too, Chris, is a lot of people think that first-time home buyers means I'm a first-time home buyer, but what they don't understand is you're still considered a first-time home buyer if you've owned a home, as long as you've sold the home and haven't owned it for 3 years.
Okay.
Right? People don't know that. People think, well, I owned a home back in 2010 and we sold it in 2015, so I'm not a first-time home buyer. Well, technically you are. Because once you haven't had that deed, or once you've sold that home and it's been 3 years, you're now technically a first-time home buyer again. And so they don't know that. They're like, oh, I have to go conventional at 5%. No, you actually can do 3% on a conventional loan as a first-time buyer again.
Okay.
So, again, just another misconception, right, that people think, which is why it's super important to talk to a lender and find out what are our options, right?
Yeah.
Because that's all a broker's going to do. A broker's going to just submit your information to a bunch of different lenders and find out what products there are.
What actually suits
and what suits them, and then they're just going to come back just like an insurance broker.
Okay.
They're going to go and get you 20 different quotes and come back and say, here they are, which one's the best one for you?
Okay.
Right? But they don't really explain it, right? The lender has to kind of explain the ins and the outs of all the programs, right? I think we've all been there, that kind of like the one that you guys are dealing with in Blackfoot right now, right?
Yes.
Bank statement loan, and talking to a lender up front, at least that knows exactly what they're doing. We like to call those day one problems, right? You should know that
Squash them before
day
they
one.
begin. Yeah.
You don't want to know that at the witch's hour. That, oh, we're supposed to close in 2 days and we have an issue, right? That should be a day one problem. You don't ever want to put someone in a predicament.
Oh yeah, for sure.
Where they think, oh my gosh, like I'm supposed to be closing on this house, and now they're scrambling, right? And then they're shopping 20 different lenders. They're hurting their credit score. They're doing all these things just trying to figure out what the solution is, when they could have had that solution day one if they would have talked to the right person.
Right.
And
Get you set up in the right way.
Yeah, you could have
from
uncovered
the beginning.
This is a big one right here, silos. We do silo homes now.
Okay. Oh, those are sweet.
So
have
sweet.
you seen where they take the silo, different than a home, but where they take the silos and they make them into like a patio?
My dad just did that.
Dude.
He had a big fire pit.
Yes.
And he did like the pizza oven thing in there.
Those
And he like bent like this and like cut it all out and had pillars coming down connecting to it. So it's a fully roofed in, covered like fire pit,
These are so
patio,
cool.
TV out there. They're super sweet.
That's
man.
awesome.
There's so much you can do now that like you couldn't do 10 years ago.
Right.
Do you know what I mean? There's just so many more products out there now. The 2-to-1 buy downs, you know, when rates are higher, people are going back to products that were back in the 80s when rates were at 11, 12%. Now they're doing these products again just to help people with affordability, right? Which is big. And I think a lot of people, as you know, right, don't know what they don't know.
Right. Yeah,
You
I mean,
know?
I think that's half the battle is just educating and putting it out there so you know you're not just stuck into one lane.
Yeah, totally. I mean, that's why we always say your first call after you talk to an agent should be to a lender, because that lender can actually lay out all the different platforms that you have.
Right.
I kind of call it like a snowflake. Like there's no same scenario. Like everyone's scenario is a little bit different. I mean, we're doing one right now with its asset depletion. It's a $5 million home.
Okay.
In Salt Lake, and he's putting $2 million down, but the guy only W-2s himself $200K a year. And I'm sorry, but $200,000 a year is not gonna buy you a $3 million mortgage, right?
Right.
But what we do is we're like, this guy's got a ton of assets. He's got a lot of net worth, right? He's got a lot in IRAs and CDs and money market accounts. So he sends us that and he says, hey, can we do anything on this? Instead of depleting all your assets, let's do an asset depletion loan where they basically take his total overall assets and divide it by 7 years, so like 84 months.
Okay.
And then we now get to qualify that guy on $78,000 a month in income.
Okay.
Now he qualifies for the loan,
Okay.
right? That's an asset depletion loan, where most people think, well, there's no way I can buy this $3 million house. I only W-2 myself. I'm self-employed. Right? We all know the perks of self-employed.
Right.
You get to write everything off. Right? So bank statement loans are huge for self-employed people.
Okay.
Right? Because again, give me 12 months of your bank statements and I can show, man, he's got 15 grand a month coming in every single month in deposits. Now we can use 15 grand instead of 2,500 bucks because you write everything off and only show 60 grand a year.
But it's
Well, now we can do a bank statement loan and you don't have to take the penalty of taxes. Right? Like most of these homeowners, my dad included, was self-employed for 30 years. And he's like, how do I buy a house, son? Well, Dad, you're going to have to bite the bullet. You're going to have to claim some income, right? Pay the man, pay the taxes. And most people had to do that. And now there's programs out there where you don't.
You got them.
You know, you can use business bank statements.
Oh.
Right? So if they're over 50% owner, you can use the business bank statements instead of just personal bank statements. Right?
I didn't know
So,
that.
yeah, a lot of different options, man, with 1099s, real estate agents, right? That's a big loan that we do, is 1099 loans.
Okay.
So we have the same option there as well, right? But again, most people don't know what they don't know.
Right.
And so it's really important to talk to someone that does know, right? I always tell people, if I had something break at my house, I'd call the plumber, right? Even though I'm a pretty handy guy, and I could probably fix it. That's not what I do.
Right. There's your specialty.
That's not my specialty. I'm going to call someone that's their specialty, right?
Well, how many times have I had to like tag you in? I was like, hey, you know what? I know the person.
Right.
Hold on a second.
Right.
Here you go.
Well, again, I think that's why relationships with real estate agents and lenders are so important, because when you can trust someone and say, I can send him this way, he's going to get all the right information. We're going to know whether or not we can do something within the first day.
Oh.
And we're going to have confidence that if we can, that we can get this to the finish line.
Absolutely.
Do you know what I mean? And I think that's the biggest thing is no one wants to be dragged through the mud. Buying a home, as you know, Chris, is the largest asset 95% of people in America will ever own. Right? Ever. So it's not something to be taken lightly.
No.
You know?
And I mean, that communication is key. It just between everybody, and that's what I really enjoyed with working with you, is that it's open and it's just very informative. And if I don't know something, hey, what's this?
Yep.
you know, and because again, not everything is in my wheelhouse.
And real estate's not everything's in my wheelhouse, right? And that's why I love working with you guys, is because I can call you and say, what is this price point, right? Do the comps support it, right? Or is this person out in left field, right?
Yeah.
Me and Braden talk about this all the time. Agents, sometimes, if you don't have a good agent, they're going to list your house for whatever you think it's worth.
It's all based on feelings.
And 9 times out of 10, how often do we see price reduction? But what does that do to buyers, right?
Yeah.
They see that. They see that, and they're like, "Oh, red flag! What's wrong with this house?"
Right.
When really, there's nothing wrong with the house. The agent just mispriced it, right?
Yep.
And so, having a good agent is so important because they can shoot you straight, and that's the best part about you guys is you're not here to just sugarcoat it. It's a big transaction for a lot of people, and they just need raw, real answers,
right?
And real expectations too. Right?
Yeah, not the fluff.
The fluff.
There's a lot of that because everybody wants the listing, everybody wants to get it, but then when you get it, the work. That's why it's hard sometimes because you got the expectations are set so high that like, oh yeah, we can do this for you, and that's not what the market's telling you. I mean, please, I would love to sell your $300,000 home for $1 million. That helps my paycheck, but that's not gonna go. Like, no, it's not going to happen. It's not going to praise. The market's not telling you that. And
this is nationwide.
Oh, yeah.
It happens everywhere. I mean, like I said, I'm in 33 states. I've been doing this 19 years, and I can tell you it's not just an Idaho thing, a Utah. I mean, this is nationwide. Certain real estate agents, if the buy just to get the deal, like you said, oh, you want it for $500, the home's only worth $450, but I'll list it for $500.
Right.
Knowing they're not going to get anyone to come in and offer $500. They're hoping someone comes in and offers $450, what they know it's worth, and then they just come down, right?
Yeah.
But good agents like yourself, they know what the right price point is. Those homes don't sit as long. People don't have to do a price reduction, and you actually sell for what it's actually worth.
Right.
Right. And then everyone's happy, right? And you're not over here over-promising and under-delivering.
For sure.
Right? Because that's what people think. If you say okay for $500, they think it's worth $500. Right? They don't see the data.
Right.
I think that's what's great about you guys is you guys show them the data.
Oh, for sure. I mean, I have, what is mine, like 6-7 pages, something like that, where I just, these are your comps. Here's where we're sitting at. Here's the high end. Here's the low end. Here's your sweet spot. We can get the high end, but it's going to take you a while.
Right.
And the low end is if you really want to get out, like right now, and then here's your sweet spot.
Again, it's no different than lending. Giving people options and allowing them to make their own decision in the privacy of their own home without feeling like you're pressuring them, I think is huge. Because so many people think like, oh no, this guy's, he's a slick tongue. He can talk it. I'm an easy sell, right? And I'm just going to go with what he tells me. And I've found that more often than not, if you put a couple scenarios in front of them and say, look, you know your situation better than I do.
Right.
Right? You make your own educated
What works
decision.
for you?
What works for you? Because what works for you might not work for Adam, might not work for Susie, but it works for you.
Totally.
Right?
Oh, totally.
And so let's go with that. Right? And so I think that's huge. Right? And that's why I always say too much communication is not enough communication. Because you can't over communicate.
No.
Especially in transactions like this. Right? Involving a house, involving people's family.
Huge major life decision.
Major life change, right? And ownership and home ownership, there's just so many benefits to it, Chris. You know that.
Yep.
From the tax write-offs of it all to the appreciation factor, right, that we see, especially in southeastern Idaho, where all these counties are at like 4.5% to 7%, just depending on where you're at. I mean, you're talking for every $100,000, that's $5,000 to $7,000 a year that you're gaining, right? And I think when people see that, they start to zoom out a little bit and they don't just look at the rate. They're kind of saying, okay, I can invest $10,000 for my down payment, or I can invest $10,000 in the stock market, right? Where I'm only accumulating what that $10,000 is, whereas $10,000 gets me into a $300,000 house. Now I'm appreciating on 300,000, not 10.
Right.
Right? It's such a compounding factor, and that's why net worth is so much higher with homeowners than renters. And it always will be because of that. Your house is a bank.
What do you tell people when they're waiting for the rates to come down?
I always say, look, if I had a crystal ball, I wouldn't be doing this. Right? Because
Right.
they all ask. Everyone asks. It's probably the first question people ask. What's the rate? What's this? Look, if I had a crystal ball, I wouldn't be doing this. And no one has it. And there's no right or wrong time to buy. It's what fits for you, right? Let's focus on what's your monthly payment, what's your outgoing expenses, right? What is your comfortable budget,
Right.
And then let's backwards engineer that.
Right. So
And
you're
let's
shopping
find it
for
out.
your budget. You're shopping
Yeah.
for your mortgage, not necessarily the house.
Correct. Because at the end of the day, we all know when rates come down, we're just going to refinance that rate.
Yeah.
We're going to lower the rate. We're going to lower the payment. And what people don't understand, I think, to be honest with you, is look, if the payment fits and it works, why not start appreciating that asset, get into that home? Because the moment rates come down, even 0.5%, the amount of people that'll start jumping off the fence and going into the market is insane. I've seen it. I mean, let's talk 2020, 2021. Rates were lower than automobile rates on mortgages.
Right.
And I can't tell you how many times I had to literally talk my clients off the edge because they had made 20 plus offers on homes. Haven't won one offer, right? Because everyone else is
everybody's
offering,
Yeah.
right? And when you have 25 people making an offer on the same house and you fell in love with 20 houses, it's very discouraging.
Oh, for sure.
And so they're just like, oh, I'm just going to keep renting. And, that's the hard part. That's why I always say, look, there's no right or wrong time. And when the markets are good, everyone's out in the market. But guess what that also does for the people that bought when the market wasn't as good? Now that appreciation goes way up, right? It's like the old Disneyland analogy. You pay $20 for a Coke at Disneyland, right? You go across the street after and it's $5.
Right.
But guess what? That's just the cost of it at Disneyland. And so when people are paying $20,000, $30,000 over an asking price because rates are so low, that's now what makes your house $20,000, $30,000 more.
Right.
And you appreciate at those levels that we saw back then of 12 to 15% year over year. So now you've really boosted the equity. And instead of having all those people making offers, you're already in your house. All you get to do is enjoy the benefits of lowering the rate and lowering the payment.
Right.
You don't have to deal with all the competition.
And you know you could already afford it.
Yeah.
So now it's just getting better.
Exactly. Again, backwards engineer to your budget. As long as it fits your budget, you're never going to lose in real estate. Ever. Right?
Right.
Out of the 70, 80 years they've been recording mortgages, there's only been 6 or 7 years ever where you actually lost equity year over year.
Okay.
So if you look at the numbers, I always say this, numbers don't lie, right?
Yep.
And it's truth. And that's what we like to show people is the cost of waiting, right? You know this. I mean, how many times have you had someone be like, man, I wish I would have bought that 2 years ago,
Every time.
right?
Every time.
Because, man, that same house was $60,000 less 2 years ago.
Dude, when we were looking at moving, relocating, right? Like, so I think when we first started looking, it was 300-ish. And by the time 4 years later, it was 650.
That's my whole point, is like there's never a right time. People think, oh, man, that house just doubled. I'm going to wait for it to go down.
Yeah.
Let me tell you something. Supply and demand, man. It's basic economics, and there's not enough supply, and there's way too much demand.
Right.
Okay? And it goes back to the numbers, right? And if you go back, let's just say this. The average homeowner, first-time homeowner, is anywhere between 35 and 38 years old right now.
Okay.
Back in 2020, 2021, it was about 23 years old.
Dang.
Okay? Why? Because rates were so much lower, so many more people could afford it. Now, it is a little harder, right? You're dealing with dual income households and things like that. But if you go back and you look at the data, the baby boomers, the Gen Z, the millennials, right? You have some of the largest population growth in U.S. history back then.
Okay.
So now you got all these people that are in that 35 to 38 demographic, which is some of the highest population growth we've ever had, that are now coming into home buying, right? It's basic economics. You have too many people that are going to want to go in and not enough supply. So are we ever going to see a crash like we did in 2008? No. It's just there's not enough there to do it. There's too many lending guidelines now, Chris, that protect against that, right?
Yeah.
That can't happen. Back then, I mean, I got into this industry in 07. I didn't even know what 08 meant until I had 20 appraisals come in low. And I was like, whoa, okay. But back then, you could pay the appraiser. I needed to come in at 500, even though the home's worth 450, right? There was no rules, regulation back then, and that's what caused it. You know, people that, oh, you got good income and good credit, all right, go ahead. Like, we don't need to verify anything else.
We trust you.
We trust you, right? And as much as I want to say I love the old ways of just shaking a hand and calling a deal, when you're talking hundreds of thousands of dollars, it's a very risky game to play. And I think that's why you saw what happened in 08. But let's be real. It happened in 08, and by 2010, the equity was right back to where it was pre-08. So real estate isn't a short-term goal.
Right.
It should be a long-term investment. Unless you're an investor that's wanting to flip houses and that kind of thing, that's different. But most people aren't. Most people, when they buy a house, it's a 5 to 10 year plan.
Absolutely.
Right? And you'll always end up winning in that. Because, again, going back to the stock market, right? I mean, you invest 10 grand 5 years later. If you're not 62, you're paying a penalty for pulling out that money.
Right.
Right? 5 or 6 years of owning a house and you cash out that equity, there's no tax penalty at all. Right? So there's just, again, so many different benefits to owning a house than renting a house.
Yeah.
You know? But most people don't know what they don't know. Right? Which is why it's important to talk to you, me, get a game plan, find out what my budget is, what can I afford, and you might be pleasantly surprised.
And that's been kind of cool too. And like when I started in the industry, I've been through a couple of my own purchases, and I've seen where it needed some help. It actually kind of fueled me on like how I wanted to run my business, because I was like, okay, I would like to know that better, and to reverse engineer, and then also go through and then have a game plan and have a clear road that like, okay, this is what we're doing, this is where we're going, and this is what we're looking at, and not just kind of everybody doom scrolls and I go on Zillow all the time anyway, right? Like, what's the new one?
Who doesn't?
I'm criticizing a $26 million kitchen because that's in my wheelhouse. So but to be realistic, when you sit down and talk with us and we go through and say, hey, okay, like you can do this.
Yep.
You were telling me about the Idaho home earlier.
Idaho Housing.
Yeah.
Idaho Housing is one of the best down payment assistance programs across the country. Again, I do business in 30 plus states, right? They all have them. Georgia Dreams, Cal Halfa, Utah Housing, Idaho Housing. Every state has its own, what we like to call DPA, down payment assistance program. Idaho Housing, in my opinion, is the best out there. Why? One, it's only 0.5% down.
That's crazy.
Okay? So we're talking a $300,000 loan, that's $1,500, right? It's not the misconception of I got to put 20% down to buy a house, or I got to do 3.5% down on an FHA loan, or 3% on a... Idaho Housing prices better than 90% of just the traditional products.
Really?
Right? I mean, you're talking in today's market, a conventional loan with great credit is right around 6 to 6.1%. Idaho Housing right now is at 5.75. Okay. And we're talking fixed rates, below market, and 0.5% down. Like, where are you going to go
to
get that? Like, it's not there. So when people realize that and be like, man, I can get into a house for $1,500 that's going to appreciate at 6% year over year, and in 5 years I'm going to make $75,000 off my $1,500. man, tell me where I can go invest that and
sign
make that
up.
kind of return. I'll sign me up. I'll put all my money there. But Idaho housing is huge, and you don't have to be a first-time homeowner.
Okay.
That's
one of the
big things.
right?
Misconception is I have to be a first-time homeowner, right? But again, kind of like we talked about earlier, people think first-time homeowner, and they think that means they can never have owned real estate before. But realistically, first-time homeowner just means you haven't owned real estate in the last 3 years.
Okay.
So you have people all the time that, I sold a house, I owned one in 2015, so I'm not a first-time home buyer. Well, actually you are, right? Because the way Fannie Mae, Freddie Mac looks at it is, as long as you don't own anything real estate-wise for the last 3 years, you're not a first-time homeowner, and not land.
Okay.
So you can own land.
No.
That's not considered a home. That's not a homeowner, right? That's land. So some people think, well, I own a piece of land, right, out in Boise. Does that mean I'm not a first? No, that doesn't. And even if you're not a first-time owner, you still qualify for down payment assistance, right?
Okay.
As low as a 580 credit score. People think you have to have this excellent credit just to qualify for a home.
Right.
But again, you don't know what you don't know. Right?
Yeah. I mean, you gotta always ask, man. That's I learned that one the hard way. I never raised my hand in class, and now it's all I do. I'm always asking you or Braden or
Yep.
someone, hey, what do you mean about that?
Right?
What's that? So yeah, man, knowledge is power, right?
It's always no if you don't ask. Right?
Oh,
I
for
mean,
sure.
that's kind of the whole point. It's like there's so many people too, Chris, that we talk to that we can't help on the first call, right?
Mm.
But that doesn't mean that we look at them like a number or like a statistic. Like we're gonna dig into it, and we're gonna tell them, especially with the technology, we have what if simulators and credit expert simulators where we can tell them, do X, Y, and Z. You'll get 30 plus points on your credit.
Okay.
And you'll be ready to buy in 3 months.
Another game plan.
Right. Just look, there's light at the end of the No.
It's like when you don't get all the paperwork, you are upside down, right?
We're
You just-
upside down. We don't know what we don't know.
Yeah, exactly.
Right? So, at the end of the day.
Well, I'm going to tackle this camera overheating thing, and we'll see how far we got.
Yeah.
And we'll have to come back and do another short trip to,
I love it.
To fill in the blanks there,
Yeah.
because, I mean, at least in the video I could flip
Dude.
this upside down, but
Yeah.
we're literally, it's special effects right here.
Hey, that's it.
So-
Hey, there's nothing wrong with that. Technology, right? You gotta love it.
Yeah, man. Okay,
Everybody
so
has it.
I guess we're going to start to wrap this up since the camera doesn't want to stay on today. But what's one thing like a buyer, well, I don't know even how to phrase it. What's one thing like a buyer does that really doesn't matter, or one thing that they should do that would change a lot of like how things go?
Okay, I would say the first thing is knowing what you can and can't do,
Okay.
right? Talk to a lender first, because anyone can use Google, anyone can use ChatGPT, right? But it's not always going to be accurate, because again, everyone's situation is different. So, I would say the first thing that people need to do is not overthink too much. It's great to do your own research, yes. But talk to someone who specializes in that field, because they may uncover something that you had absolutely no idea about, or ChatGPT had no idea about, AI had no idea about.
Right.
Because it's all about how you phrase and ask that question.
Right. So many
Right?
different variables.
So many different variables. And then the other thing is, stop worrying about saving up a ton of money to buy a house. Everyone I talk to, I still got to save another $10,000, or they don't understand that there's down payment assistance. There's other programs that they can do,
Right.
that doesn't require that and still gets the end result of home ownership, right? The American
Absolutely.
dream, right? And that's what everyone wants.
Let's do it, man.
All
Well,
right.
I think in the end of things, what we're saying is make a plan. Give us a call.
Yep.
We'll help you set up a plan, and we'll help you get there. Till next time, guys, we'll see you around.
Thanks for riding along on Where the Road Gets Real. We appreciate you listening and watching. If you enjoyed the conversation or want to be part of it, please share, like, subscribe, or reach out to join us on the show. Until then, we'll catch you on the next one.